weather forecast today?
Today's forecast, a lot of sunshine, blue skies, marine clouds. Just a perfect day to go outside and relax. That's your forecast. We'll be right back.
Yeah, sunny days, sunny days, sunny days. No clouds in the sky, but again, away feels like it's been.
Welcome back to another episode of The Social Beaches. I'm Kelly Bowling.
I'm Carolyn Smith.
And we're with the Coastal Estate team at Compass. We sell real estate on the Space Coast and down into Indian River County. And if you have any real estate questions or just general questions about our area, you can always DM us wherever you're watching or send us an email to hello@coastalestateteam.com, or you can call us or text us at 321-422-2160.
Yes.
So today we're going to talk about pre-approvals. What are they? Why do I need one? What do they mean? Mm-hmm. And then a little bit more about what makes up your total payment and when you're negotiating an offer,
Yes.
trying to decide what you want for your terms for your purchase, how some things might make more sense than others with your money. So,
And you just had that lady, I was thinking you just had that lady just like last weekend who got a pre-approval. So this is very timely because we're having this more and more, who got a pre-approval and then was like, found out what the payment would be.
right.
And
And
was like-
she balked at it.
Right.
And I get it. I
Right.
do. Because they're not understanding that you've got taxes that need to go into that. So you need to be familiar with how much am I going to pay in taxes on a home about this value?
Right.
And then, of course, in Florida, homeowner's insurance is
Correct.
expensive. So what can this home buy me? Like, what age of home am I likely going to end up with? And what does that play into for my homeowner's insurance? And for her, I mean, it was a $280,000 pre-approval, and $700 of her payment every month was going to be taxes and insurance. Can you believe that?
That's huge. And if you're FHA, you also have mortgage insurance.
Which I didn't know what that amount was going to be. So I
Right.
threw in like a really low number because I had
Right.
no idea. Because I'm
Right.
not the lender. Don't ask me these questions.
Right.
This is why your lender needs to work the weekends.
Right.
But I threw in like a $50. I
Yeah.
have no idea what it would be. It's probably much more than that. And her payment was going to come out to like over $2,500 a month. And she's like, well, I can't afford that. And I said, okay. I said, well, where are you trying to stay? And
Right.
she said she
Work
wanted to
backwards.
be under $2,000 a month. I said, okay, we need to talk to your lender and reverse engineer this. Like, we already know this is what your taxes are going to be, and this is what your homeowner's insurance are going to be roughly. So where does that leave you with a purchase price? So we did talk to her lender on Monday afternoon because he was busy Monday morning, and it turns out like she really needed to be under $225,000. Which is a far cry from $280,000.
Far cry from
It
280.
really pushes her completely out of our area.
Yeah.
And now she's searching for an area in Florida that would have a home that's livable. She needs a certain number of bedrooms for her family. Where is she going to go look?
And you have to be thinking about, too, HOA fees. Because if you live, now that's not part of your payment, but it's part of your payment.
It's part of your monthly
It's your
outgoing
monthly
expenses.
yeah, so you have HOA fees.
She was very adamant she didn't want to be an HOA, and I think that was part of it. Why? Because she didn't want
Right.
to have to pay anything
Right.
extra. But it's just, when lenders are giving out these pre-approvals, they really need to be discussing, and I know
Yes.
that the lender I work with does, and I know that
Yes.
your lenders that you work with do, discussing what is your payment going to be at this price, or asking them how much are you comfortable shelling out
Yes.
for your payment with everything every month so that we can reverse engineer that rather than just tossing you a letter that's for however much you think. So she thought this was a self-directed number that she had put on the paper. So when I asked him, I said, could she do more? He was like, well, yeah, she could do more. This is just the number she gave me. So what you're able to do doesn't always equal what you're going to be comfortable with.
Right. And honestly, I mean, we always advise people, go a little light, go, if you're comfortable spending X dollars per month, and they say, well, that equates to, let's just say it equates to a $400,000 purchase.
Right.
But you should go back off of that a little bit because right now, the way insurance is in Florida, what you think you're going to be paying in insurance and what that lender thinks, you might pay that in the first year. And then the next year,
It could go up.
it could go up.
I know mine's gone up every year.
Mine's gone up every year. And we did just get, I think, what did I read? Eight new insurers entering the Florida market. Thank goodness.
Yeah.
And in condos, in an HOA, I feel like, yes, in a single family homes or something like that, the HOA might go up a little bit per year, but you're not as impacted by insurance and maintenance and things like that. But in condos, that monthly maintenance that you're paying, sometimes goes up by a lot.
Well, I will say not just condos, but townhome associations. I've noticed that here, and specifically two that I have clients that live in.
Yep.
There's one that's a huge, and it's very much a starter home product that's
Yes.
in there because of the price point. They are, under $300,000.
Yes.
3-bedroom and 2-bedroom townhome units with a garage, and their monthly fees went up to almost $450 a month.
I mean, that's
It's
crazy.
been $100 extra every year. So people, that's like an extra $100 a month that you're paying. Doesn't sound like a lot, but when you are on a budget,
Yeah.
that's $200 in the last 2 years. And I've noticed a lot of them are up for sale because of that. And then I have my investor client. She bought some townhomes back, I think, 2022. So it's been almost 2 years ago. And they were paying just under $300 a month for the townhome
The
maintenance
monthly
fees.
maintenance,
And
yeah.
mind you, the only amenity there is a gate. That is it. It's over $600 a month now. And I said, what happened? She said, they're citing inflation and insurance as the reason. I'm like, well, that's for what? What are they paying extra for besides
Yeah.
insurance? So I don't understand. Maybe lawn care, because they do cover the lawn
And
care.
it might be so insurance is so impacted by things like the age of the roof. It might be time for that townhome community to replace
and
their
so
roofs.
I wouldn't doubt it. So it's just, you have to think about, what are you buying? Where are you buying?
Yeah. And for condos, we've seen huge increases. I had somebody close on a condo, and I think the monthly was like $750. Condos are more expensive because they're covering insurance on the building and also covering like a lot of the maintenance.
And some of the utilities sometimes
Yes,
too.
yeah. But it went up to like I think over $1,100 a month very quickly after she purchased. So sometimes we're aware that that's going to happen because we request meeting minutes and we request all the things that will tell us, like, are they going to have a large increase? But sometimes we're not aware, and the meeting happens after they close, and then 6 months later they're getting a large increase. So you do your pre-approval, and a lot of people are like, oh, I don't want to get a pre-approval. I don't need a pre-approval.
You do.
You do need a pre-approval.
Absolutely.
And you need to be talking to the lender about just what Kelly said, which is, what does this equate to in terms of payment?
Yes.
And then you should be going to your realtor and say, does this make sense? Because is the insurance number that they gave you
The right number.
The
I will
number.
tell you all the time, every single time, when they're giving you that pre-approval, they're assuming that your insurance is going to be about $2,000 a year.
Yeah.
I don't think, unless you're buying
I
brand
will
new.
just say my insurance is like $7,000 a year. And it's like $7,000 a
Mine's
year.
about $4,000 right now. I don't know what
Yeah.
it'll be next year, but
Yeah. And I don't have
yeah.
a mansion. I don't have
No,
a
me
great big
neither.
house.
We are not rich.
No, we are not rich, although everyone seems to think we are.
Right.
I don't know why.
Yeah.
But
So
yes.
that's the other thing is like interest rates and how does that impact your payment?
Yes.
Obviously, it's huge, and it's crazy to me because when I sit in on these closings and then you get to hear then what's that payment going to be for
Yes.
this person, and you know what they bought the house for, and you're like, what? So I had recently some clients that closed, and their loan amount was a little more than half of what my refinance mortgage loan amount was, but I refinanced at a peak time, like
Yes.
3% interest, which is still higher than a lot of people
Yes. Some people are getting
had during a
2.5,
certain time.
yeah.
But our payments are actually, they were paying more than I am per month, which is crazy to me.
It's that interest rate is such
I can't
a killer.
fathom writing that check out or just making a payment online for that amount of money to live in that house. Do you know what I mean?
And I know, we'll hear people say things like, oh, but you can refinance later. Yes, you can. If the rates go down, you can. But you need to make sure you are comfortable with the payment now.
Yes.
The payment that you're going to be making. Don't think, well, I can squeak by. It'd be really hard. It'd be really a struggle, but I can squeak by. But in a year, I'll be able to refinance. No one knows.
No. That's like saying
No
in a
one
year I'll get a
knows.
raise.
Yeah.
Is it promised to you on paper somewhere in
Yeah.
a contract? Then maybe. But
Yeah.
otherwise,
Don't do that.
and then so buyers are like, well, what should I do when I'm making an offer? So many buyers are so focused on getting a better price for the house,
Yes.
right? So the house is listed at $500,000 and they're like, well, I want to pay under $5,000. I want to pay $480,000. So I'm going
Right.
to ask them to give me that house for $480,000. And so then they'll go in, and when you're getting a $500,000 loan amount,
Yes.
okay, obviously you're not doing 100% unless you're VA, but
Right.
today I looked it up. It was like 7.525, oh my gosh, percent.
I almost choked on my tea.
Right?
Yeah.
Your payment then without taxes and insurance, because I didn't put any of that in, so
Yeah.
principal and interest would be $3,505. a month.
Is anyone else like falling out of their chair
Right?
on that? That's
7.525. That's crazy. Well, if you got that $20,000 less price, it's going to save you about $150 a month. So then your payment is $33.64 for $480. Same interest rate. Now, if instead you tell the seller, I want you to give me 4% towards closing costs, rate buy down.
Yeah.
So that gives you a full 1% discount on, because every point you buy gives you 0.25% down on your interest rate. So 4% would be 1% rate buy down, so that would get you to 6.525, which is still gross. Then your payment is $31.69. So you're saving more.
Yes.
Per
month.
That's $350 a month in savings versus $150.
Right. And you definitely need to be running all those numbers and getting, to the seller, it's the same. To the seller, it's the same.
It's the same to the seller.
Yes. Yeah. Their net is the same, whether they give it to you. And you don't take more credit. Don't take more as a seller concession credit than you can actually
You have to make sure that you can use everything that, if
That's
you're
up
going to
to
get
the
that
lender.
for
You
the
need to talk
point
to the
buy
lender.
down, then sure,
Yeah.
you'll have that. But there are cases where you could leave money on the table if you don't have enough.
Right.
Because maybe your realtor's trying to negotiate repairs that are very costly.
Yes.
Well, do you have it in there,
Yeah, make sure that you can take what you're asking for.
Yeah.
So definitely, but that's a really good example that you gave, and I think people need to remember to do that, especially now. It wasn't a big deal when rates were
when
2.5%,
rates were 2.5%,
3.5%.
3%, nobody cared that much. It was like, how much more can
Why?
I finance?
Yes.
What else can I buy? Yeah, there was a lot of that going on.
But not anymore.
Those
So,
were the
and
days.
as realtors, we want that pre-approval up front, and we want it up front for a lot of reasons. But one of them is to actually see, do you know what your payment is? Here's what you're pre-approved for. What's the payment that equates to that? What are those numbers? What's the breakdown of that?
Right. Well, that's one thing when I work with my preferred lenders, I know that they've already had these conversations with these people so that I'm not going out with a letter that says they can buy this much and then ending up in that situation. And so that particular lead came from another agent. It was her lender that she had received the lead from.
Right.
And so that conversation had apparently not been had.
Apparently not.
Yeah. So I got to waste a whole Sunday.
Yeah.
Unfortunately. It does happen. It happens all the time. That's part of the job and that's, I guess, why we are compensated the way that we are.
Yes.
Because you don't get paid until you sell something.
Yes. And
can you imagine if we got paid by the hour?
Ooh.
There's some chatter on on the social media.
I think it would take a lot of time, adding up. If anyone's nothing against lawyers, my father was a lawyer, so but I had to engage with a lawyer probably a year ago. I had to use a lawyer, and I was like, I think they charge you for the time to calculate how much time they're charging you for.
They would
I think that's added
how
in.
much time it takes to sit there and log every phone call, every email.
Yes,
in
and they
15-minute
round up
increments.
everything's 15 minutes. So that you talk to them on the phone for 5 minutes, that's 15 minutes. And they have to go consult with a senior attorney or ask a question, that's 15 minutes, or maybe 30. And you also get charged by the senior attorney who also consulted on your case.
I'm like, can I just get your paralegal?
Next thing you know, you're like, how did I spend $10,000 on this simple little thing? You keep getting bills, and they're like, you need to refresh your retainer account. You're like, am I even going to
we already went through that? How? Yeah.
Nothing against attorneys. I think most of them are
they've
very
got
good.
a lot of education,
Yes.
for sure. A lot of time in school to do what they're
and
doing.
they're doing some important things, but it's like if we had to bill by the hour, it's like, I spent a phone call. Okay, here's 15 minutes here, 15. Oh my gosh, we would need a person just to add up, in charge of billing.
Especially when we're doing recon work, calling around, finding permits and and calling professionals to meet us for estimates.
Or somebody wants to go out and see properties for 6 hours in a day. Oh my gosh.
Right.
Yeah.
Or remember when things were crazy and you'd have to write 24 offers before they got one.
Yes.
Yeah.
No one's wanting to pay for that. All right. Well, anything else?
I think that's it.
Okay.
Yep. We'll see you next time.
See you next time. Cheers.
Today's forecast